What's going on, you guys? Well, my name's Aram Chu, and this video is gonna basically break down for anybody who's already in forex why the sp 500 is a useful tool that I use to tell when the dollar is being, for example, pumped up. You know, more stimulus is being added versus it collapsing. So I'm gonna open up this right here. So the symbol you want to go to is indices cash, and it's called the S&P 500 right here. So now I go here, S&P 500. So I'm gonna take off these things. I don't like them. So this is the monthly chart, you guys. As you can see, it's extremely high, extremely high. So what this S&P 500 represents, it's the measure of the top 500 companies in the U.S. stock market, right? And right here, it represents, showing on the chart that the stock market is valued very high at, 2139, right? So now we just take a look at it on the weekly, zoom in a bit, take a look at the chart, right? As you can see, it's at a very high point. Let's look at the daily. So one of the first things that I do when I look at a chart, right? Let me see something. Hold on. All right, so the first thing I do when I look at a chart is that I look for the gaps. So what the gaps represent, it represents a false price point where price is obviously being manipulated, and in this case, it's pumped up by the Federal Reserve. So right here, you see this red line right here on the daily? That's a clear gap that the market has not touched or breached. It's at 1864. So right now the market's at 2139. So the market has to come back down to this red line and pass it because that will be the original value of what the dollar really should be. So this whole move upwards is just pumped up artificial movement. So right now, obviously on the daily, you mark that up, but also you want to go on the 4 hour, and you want to also look for the gaps, upper gaps as well. So, I did see one up here. I want to show you guys. Let's look at the 1 hour. So it's important to look at most all time frames, really. See the 30-minute. If I can find the upper gap here, I'm gonna show you guys. Hold on. It's probably in the 15. So you have to really, I look at all these time frames. I just mark up my chart this way. So I know there's an upper gap here that I'm gonna show you because I've already seen this chart. So hold on a sec, you guys. Just be patient a bit. There it is. Boom. You saw that? Boom, boom, boom. That's just money for me, man. That's all I smell. But anyway, go here, mark it up. Boom, right there. You see it? You see that little gap right there? Let me go back to it so you guys can see it better. Right there, you see it? The market's gonna come back up and touch this. So now let me zoom back out to the daily. So now you see this on the daily, right? What's this red line in the middle here? It doesn't even matter. Okay, so actually I'm gonna make it orange or this green. That will represent my TPs, right? So now let me explain this. So that's the daily. Now you can actually go back more in time and actually look for lower gaps on the daily, right? So I've already looked at this whole chart on my computer, because sometimes on mobile it's not gonna let you go all the way back, right? But just how you see that on the daily at the 1864, there is a gap as well around 1400 levels. There's levels, there's gaps in between here, but there's around this level, there's another gap. And there's possibly more ones that are lower, but there's a gap around here, this 1400 level, but you would have to look at it on your computer, and you have to go back in time and look at it from the daily into the 5 minute, and you have to look for the gap. You will find it. But that's the very important analyzation, I believe, because that represents a false price pump, right? So ever since back in 2012, the dollar has been pumped up at a stimulus, so the economy supposedly has been doing better, right? But in reality, the dollar has lost a ton of value because it's not backed by gold anymore, and we're just printing more and more and more money, right? And just a whole lot of different things are going on. I'm not going to go over, but that's what this represents in the chart. So now that I have that marked up, I look at it back on the monthly, and look at this. This huge move is more than 50% of the market, you guys. So I expect this to go back up to the 2189 at the top to clear the upper gap, possibly pass it a little bit more as a stop hunt, right? For you guys who use that term, or just just a false move from the market manipulation, and then come crashing to the 1400. Come crashing. I mean, it's gonna be crazy, you guys. That's over 10,000 pips for sure, right? And that's the stock market. That's more than that's about 50% plus. So I mean, this is why these gaps are important. That's why I use this S&P. So right now, when I'm trading forex back in during the week, I'm already looking for that strong dollar move. I'm cautious for it because I know there's an upper gap on the S&P, so I know that they're going to pump the dollar more, right? So that's what that represents. And then the long term will obviously be the big term crash. But right now, I'll be looking to buy the USD with confirmation. So I'm obviously waiting to react to the market though, but I'm just cautious for the strong dollar right now because I'm looking for that gap to be filled on this S&P before heading to the longer levels. So that's why I use this S&P, you guys. Very important tool. So definitely, you guys. We'll go on to the next training another time, you guys. It's good to have you guys here.